All right, here we go. That's better. That's better. All right, so auditing, accounting 4310. This is chapter 10, which is the finance and investing cycle. And I'm trying to be brief again. I end up, my brief tends to be 30 minutes. I'm going to try to do less. No guarantees, right? Anyway, quick message to start us off. Excuse me. This is from a fellow named Bernard Taylor, who lives in Michigan. And it comes from a Bible verse, 1 Corinthians 3:2. Well, I guess it's part A, so it's not the whole verse. But anyway, it says, I fed you with milk, not solid food, for you were not ready for solid food. Okay, so we'll come back to that in a minute. Here's our little message, okay? When I was a little boy, I frequently compared my height to that of my mother's. Of course, one day, I did become as tall as she was. Physical growth is natural. However, in the Corinthians passage, Paul was more concerned about spiritual growth, the spiritual growth of his readers. He deplored the fact that he had to feed them with milk instead of solid food. How is our spiritual growth? We often overlook the fact that the purpose of the Christian life is to become more like Christ. Growth should characterize both the physical and spiritual sides of life. If Paul were to visit our church today, would he feed us? Would he find us feeding on milk rather than solid food? The inevitability of growing older physically is a reality. Nevertheless, we can keep pace spiritually by studying God's Word and living according to the principles Christ taught us. Okay, so when you go back to that verse, you realize he's feeding milk to followers instead of solid food. Is a what do you call it? Like an analogy of even though they're physically mature, spiritually they're not. Okay, so that's pretty little passage today. So thank you, Bernard from Michigan. Okay. Anyway, let's go into chapter 10 here a little bit. We're going to do auditing of the finance and investment cycle. Okay, so we're talking about a lot of this ties into cash management. You got to have cash on hand to make purchases. You got to have cash on hand to pay employees. Obviously, good cash management is going to be having as little cash on hand as possible, but when you need it, it's there, right? So when you don't need it, it's investing earning money. When you need it, it's there and ready to be dispersed. So there's the three wings of this cycle. You see the 1, 2, and the 3. This full cycle here, you see it does kind of, get into that investment. I'm going to make this bigger. Let me see if I can make it bigger. Let's see. Where's my zoomy at? There we go. That's better, right? Excuse me, I got the cough this morning. So it leads into the other cycles. It's just essentially having the financing, the ability to purchase the raw materials for acquisition, and this is kind of like the expenditure. So this is kind of when we're buying the raw materials to turn them into finished goods. No, I'm not. I'm lying. This is buying the stuff. This is turning into finished goods. This is us selling it to get cash, and the excess cash we'll invest. We'll use the otherwise we'll have. If we need more money, we'll borrow it or sell stock. Okay, to make sure we're ready to start the cycle again. Okay, that's a little bit better. Good. So number 1, now it's too big, right? Financial planning, right? Again, trying to make sure we have. I gotta make it smaller. Now I'm freaked out how big it is. Boom, boom, boom. We'll do 125. So number 1 is the financial planning. Obviously, we have based off a forecast. We gotta make sure we have cash on hand when we need it for the acquisition cycle. Raising capital is a second part, whether that's through debt financing or equity financing. That's part 2. And then down here, part 3. Where's number 3? I skip it? There it is. Investing transactions. So when we have that extra cash, we want to invest it to be earning more resources. What does it say? The company investments can take many shapes. Invest company resources through the purchase or lease of property, plant, and equipment. Investment in tangible assets may be in the form of purchased assets, patents, trademarks, okay, or accounting allocations, goodwill, deferred charges. Finally, a company can have a variety of types of investments in marketable securities. That's a little more thinking about, like stocks or whatever, stocks and bonds. Anyway, some of the important considerations there is going to be authorization. We'll talk about it shortly. Very important to have good, clean authorization. Custody is important too. That's going to be coming up as well. If here, let's say if there's two people that are involved, then it's called dual control or joint custody. Okay, so anyway, record keeping for investments, and we want to see some reconciliation too. Let's move forward to our first question though. So our first question for your discussion board is right here. It's highlighted on the screen. Okay, so who is normally responsible for the authorization of investment activities, and why is the authorization normally performed at this level? Okay, so authorizations, isn't there? There's probably something to do with this. I'm not going to, I don't necessarily want to give it away, but probably in here. So you can read that and figure it out. Who is normally responsible for authorization of investment activities? Why is the authorization normally performed at this level? That's your first question. Make sure that gets filled in on the discussion board. Okay, let's move forward. Excuse me, to our relevant assertions. So this week I'm not doing a relevant assertions question. Instead, we'll just kind of go through this is a little bit different of a chapter than the other ones. We're not doing confirmations. The substantive work is fairly, I want to say easy, but it's easy to recalculate a lot of this stuff. So it's easy to kind of confirm a lot of this if it's the actual computing interest or or the dividends received correct. That stuff can be easily found. Some of the other stuff, valuation, which can come off of management estimates, is a little bit more of a gray area in this chapter. Regardless, these are our relevant assertions for the chapter. Okay, and these are the kind of the categories that you'll see within the finance and investing cycle. So when we talk about investments, we want to make sure that they actually exist. Okay, these do go together. Remember, because we're talking about balance sheet item here, existence is a little more important here than this occurrence. Completeness, we want to make sure that all investments that should be recorded are. Valuation, as you can imagine here, there is some issues. Thinking about, all right, well, if we purchase them at our basis is a certain amount. The current value is a certain amount. How do we value that asset? Should kind of make some sense. And then what kind of presentation and disclosures are required? Okay, so we'll talk about that in a little bit. Long-term debt is actually the same stuff. Okay, so the same assertions, but really, again, we want to make sure that these actually exist. Okay, completeness, they're all there that need to be there. They're valued correctly. Presentation and disclosure. Now here we're going to get into some other stuff like debt covenants. When there may be some restrictions. They could be up here as well because of some of these debt instruments. Capital stock. Excuse me. I had to cough today. Anyway, capital stock. We're talking about the certificates that the public company we're auditing issues or has outstanding or has or can have outstanding. How many is authorized, how many are outstanding, how many are held in treasury. With presentation disclosure, and then retained earnings is completeness. Okay, everything that should be in retained earnings is, and there's no restrictions, stuff like that. All right, so move forward. Okay, let's do anything here. Yes. Okay. Hang on. All right. I should have got me something to drink. Fair market value. All right. The reason that there's the trouble with this chapter isn't so much what we're doing, is that some of it is difficult to value, okay? And this is an idea of what we're talking about. So in the investment cycle covers a number of difficult to value assets. And here's some examples. Investments in debt and equity securities or unique assets. Okay, derivative instruments. I remember that in college. That was a long time ago. Maybe we need to bring in Mr. Intrican and give us some details on these derivatives, stock options or whatever else, the option to buy a stock in the future for a certain price. Certain financial instruments, and this goodwill is always kind of hard to get your mind around too. Loans and other receivables that are possibly impaired, pension and post-retirement assets and liabilities. Okay, so some of this stuff gets quite difficult depending on how big the company is. Could be depending how much work you got to do in this section of the audit. One of our terms in this chapter is related party transactions. I actually have an aunt. Is it my aunt? Second cousin. It's my dad's aunt. Wait. My dad's niece. I don't know. That used to work at Caterpillar. Retired there as an accountant. But anyway, related party transactions are frequent. Here you go. You got Caterpillar Incorporated. They build, of course, construction equipment. But they also have a division that builds engines. Because engines are sold from the engine division to the construction division. And because, here's the big words here, corporate management could influence the nature of these transactions, such a sale qualifies as a related party transaction. Because this is the reason why, not because it's with the intra-company, but because management could influence the nature of these transactions. So this pops up even in Principles 1. It's just glossed over, but essentially here's another example that deals with something like heavy machinery. I used to work at a public school, private high school, and the bus that we had, the brand of the bus was Thomas. Okay, it's Thomas buses. Okay, big yellow bus. The engine in it was a Mercedes-Benz engine. All right. Now Mercedes-Benz also constructs trucks that use that same engine. Okay. So you see where there can be some of these conflicts. Okay, so Mercedes is going to sell this engine to Thomas for a profit. Okay, but when it sells it to itself, essentially sells it to itself, how do you value that engine? Is it just a cost to manufacture? Do you put in a predetermined sort of profit margin? That's where it gets kind of hairy, and also where management could influence the nature of these transactions. We can influence the cost associated to that engine, which would thereby affect the profits of a certain division. Here's the part about loan covenants. Of course, if we're borrowing money through debt, then these loans may have some covenants, which are where the bank has inserted clauses in loan agreements intended to keep the borrower's position at a level that will ensure repayment of loan. So we may require the company to, or the bank may require the company to keep cash at a certain level, can only pay dividends if so much cash is available. So that's what you see here, restricting the payment of dividends, restricting additional borrowing, okay, or using of assets for collateral for other debts, okay. So loan covenants need to be disclosed, to be a disclosure issue dealing with debt financing, okay? Okay, let's keep moving. All right, so we've got a lot of markup here. So the internal control activities and design evaluation. So remember, public company, we have to do an audit of internal control. In this area, however, okay, we still need to test controls. However, we really, it's like you don't put too much into it because the controls don't really replace the substantive work in this area. So what typically you see in this area here is, yes, you gain an understanding of the controls, but then regardless, you're going to do all your substantive testing because the controls don't help really with the preparation of those substantive substantive testing where they may in other sections. Okay, let's see what I've got highlighted. In the finance and investment cycle, auditors look for control activities such as authorization, appropriate custody, record keeping, and periodic reconciliation. Okay, we also want to look at who in management is involved in these transactions or these functions, and then the answer there is towards the top. Okay, it needs to be from a high level. Test of controls generally begin with inquiries and observations of these related controls. Okay, of these related to these features. So inquiries, the primary thing there is going to be probably the internal control questionnaire, or perhaps if you want to go through the narrative or the flow chart, again the standard is going to be the questionnaire. And then observation, you want to observe. If it's talking about custody of some of these stock certificates, then who's in charge of it? Where is he? Are they in the safe? Let's open them up and look at the certificates. These certificates have a CUSP. Was it CUSP? A CUSID or something like that. I think you'll find it here in a minute. It's almost like a fingerprint, right? So we want to make sure that the cusps. I think I'm saying that wrong, but the number associated with them is what it's supposed to be. You don't want somebody selling the stocks off, buying them back at the end of the year, and possibly getting a gain that they're taking home. So, because if they did, the stocks would have a different number because they would be a different set of stocks, almost like a serial number on a dollar bill, right? Or the numbers on the dollar. And then down here in green, because finance and investment transactions are often individually material, each transaction usually is audited using substantive procedures. So because most of these are always material, we got to look at them individually anyway. So we don't really want to spend a ton of time on controls unless there's a huge deficiency. We just want to gain an understanding and then move on to testing. Down here, for public companies in which the auditor must report on the effectiveness of controls, it's essential that we do evaluate the controls. However, and this is what it says here, however, for the majority of non-public clients, so non-public, test of controls may be limited to entity level in this section. So almost very little, almost zero, I don't want to say zero, but the bare minimum in non-public, because we got to test these only because they're all material. Okay, but now in terms of for the public company audit, we do have to make sure we have enough evidence to be opined on the internal controls, and that's where we're going to stop. All right, let's keep moving. All right, what's this? So a part of this chapter is estimates, okay? And this is where, we have to use professional judgment. We have to realize that it's not about whether the estimate is correct or the only way to do it, because it's probably not. It's all about, is the estimate fair, okay? Is it low? Is it high? Doesn't matter. Is it fair? Okay, so if it's in the range of fairness, whether it's low or high, then it's good. Okay, accounting estimates is an approximation of a financial statement item, element, or account. Estimates are often included in the statements because the measurement of some of the valuations is uncertain, and also relevant data cannot be accumulated on a timely, cost-effective basis. So there's a cost-benefit problem. Okay. So, and here's where you'll find some of the normal estimates within a financial statements. Okay, depreciation. Okay, obviously useful life. Now, a lot of that is kind of set up in tax codes. Like computers 3 years, vehicle used to be 5 years. It may have changed since then. Furniture is 7. For tax codes, you kind of mirror the tax code. But ultimately, if it's some sort of a strange machine, okay, it could have like a units of production that's an estimate from the manufacturer. It could be where we say, well, hopefully it'll last 6 years. So let's just give it 6 years for a useful life. And obviously salvage value. For some things like vehicles, salvage value is very easy, not even really an estimate. It's almost like guaranteed. Okay, if I know in 5 years, this, Dodge Charger that it's probably gonna have 125,000 miles on it. What's it worth? You can get a pretty close estimate, right? But other machines, a machine that you're using to manufacture something may be very hard to find a buyer. Especially even more so if it's old. So a fair salvage value could be very, very. What's the word I'm looking for? An opinion, okay? An opinion. And then what's down here? So you see the other ones too: financial instruments, accruals, leases, rates, imputed interest rates. So sometimes it says there's zero interest, but you got to impute interest. Let me slow down. Sometimes you'll have it looks like a zero interest rate, but you actually have to impute a interest rate on it because it's not really no interest. So that would be a little bit of an estimate as well. And then what's down here? Client's management is responsible for making the estimates and should have process and controls designed to reduce the likelihood of material misstatement. Okay, so this is kind of like in the whole internal control area. Significant relevant aspects of such controls include the following: management communication of the need for proper accounting estimates. What's this here? Preparation of estimates by qualified personnel. Skip down to the bottom. Consideration by management of whether particular accounting estimates are consistent with the company's operational plan. All right. Now, when we're dealing with this finance and investing section, authorization is pretty important. Okay, most transactions in the financing and investing cycle involve large amounts of cash or other assets. Therefore, authorization is a critical issue when examining these transactions. Okay. And this actually ties into that first question, right? So it's on that first page. It's also being represented here. The issuance, sale, or purchase of company stock and bonds, the obtaining of large bank loans, the purchase or sale of large assets generally are discussed at the highest levels of the organization. And the highest level pretty much is the CEO, the board of directors, right? Chairman of the board of directors, CEO. So that should tell us, and you see it right here, the auditor must review minutes, okay? The auditor must review minutes of the board of directors meetings, finance committee meetings, or other appropriate committee meetings for the authorization of significant transactions, including dividends, treasury stock repurchases, the issuance of common stock options, the acquisitions, among many others, okay? So because it's high-level stuff, it needs to be approved at a high level. Therefore, we can trace all this back to, or vouch, whatever. We can go back to these minutes to see, if we read the minutes, then we know what to be looking for when we get to this section, okay? Oh, look, in April, they did a purchase of treasury stock. Okay, so we can go to April's books and see those entries, okay? They've all been approved. All right, custody is important too. Custody on the stock certificate book. Okay, so this is, now let's put it in perspective. Okay, large companies, okay, the stock certificates are going to be held by registrars and transfer agents, so it's not really an issue for them. Now, smaller companies, though, will have its own stockholder records. Okay, a stock certificate book looks like a checkbook. Okay, and then you're issuing certificates of stock as opposed to checks. And they have value. If they bring them back, you have to buy them back, or they can sell them to somebody else. Regardless, the company should have a record of certificates that are outstanding in the possession of owners. Okay, custody of the stock certificate book is important because the unissued certificates are like money or collateral. If improperly removed, they could be sold to buyers who think they are genuinely issued or can be used as collateral with unsuspecting lenders. Auditors should test controls surrounding the physical security of stock certificate books and test the processes for issuance of stock certificates. Okay, so not only are we going to look for approval of stock certificates going out or being issued in the minutes, but also we want to see who's responsible for the certificate books. Probably going to be something like the controller or the CFO, and we want to make sure that they're safeguarded, maybe in some sort of a safe where they reside throughout the workday. Okay. Down here at the bottom, here's our second question for the week. So this is question number 2. It's highlighted here in pink. What are some? So this refers to the estimation process. What are some of the specific relevant aspects of management's control over the estimation process? And what are some inquiries the auditor can make? And now that's up here. Okay, it's up here on this page. You can look, read this section, this page, and you'll find all your beautiful answers. Okay. So one more time, what are some of the specific relevant aspects of management's control over the estimation process? What are some inquiries auditors can make? All right. So that's your second question for the week. Please answer that in Blackboard as well. Okay. What's next? This is something you can. These are always good to look at. Let's look at the first one. Okay, these are ways to kind of read through, what's going on in this process. It's a huge chart, but let's look at least at the top one here a little bit. For investments, okay. Remember our relevant insertions are existence, completeness, valuation, and then P&D. Okay, there it is. So these are great to look at for some additional or some guidance here. So for investments existence, okay, what can go wrong? Management may sell company-owned securities for their own benefit. Okay, so what's the control activity? Okay, well that's going to be essentially what do you call it? Reconciliations of some of the transactions. Broker transaction confirmations should be periodically reviewed by the investment committee of the board of directors. Okay, so any changes to investments should go through essentially the board of directors. Okay, so our test of internal control will be to inspect documents for evidence of periodic board review of purchase transactions. Okay, and how can we, what kind of tests we do to confirm this? Well, we'll get a confirmation from the investment brokers, from the brokerage firm, okay? And then, if we get a year-end statement, if we know the year amount, if the end amount agrees, then any additions or subtractions that were made must have been approved. We can find the approval as well. So these are good to read through. I'll leave you at that. I would recommend, reading through them. And let's keep moving, though. I think that's about it. Oh, here we go. Excuse me. Long-term liabilities and related accounts. Okay. When auditing long-term liabilities, auditors usually obtain independent written confirmations for notes and bonds payable. Okay. So when we do this, the auditor is going to confirm the amount owed. Okay. Almost like when you confirm accounts payable. Says here, in the case of notes payables to banks, we'll just use a standard bank confirmation, and they'll confirm it there with the other bank accounts. So like when you're confirming the cash balance, you can also confirm any sort of a loan balance. Okay. The amount in terms of bonds payable, mortgage payable, and other forms of debt instruments can be verified by reading the bond indenture. That's going to give you the written agreement with the in terms of the interest rate, the due date, and also the amount. Okay, the written agreement with the bondholders and confirmed by request to bondholders for the bond trustee. Okay, so you see here within this the long-term debt, we've got We can confirm it in multiple ways. You can if it's a bank loan, you can confirm it with on the bank confirmation. If it's a mortgage payable, you can always confirm it with the mortgage lender. But you can also look at the bond indenture to know how much interest rate is, and from there, using something like an Excel or even a calculator, you can compute how much interest should have been. If you have an amortization schedule, you know exactly how much interest should be, and it's not even really a guess. It's like, here it is. You know that this year this is the amount of interest. You can easily check your interest expense account to see those entries. Everything's good. And then down here for stockholders' equity. Again, these are usually well documented in the minutes of the meetings. Okay, we also can have proxy statements and security offering registration statements. If it's a publicly traded company, then it requires filings with the SEC. We can look at those filings. Transaction authorization can be vouched to these documents, and the cash proceeds can be traced to the bank accounts. Okay, so it's, for the most part, this stuff, it's not overly difficult to either recalculate or see that everything's there. The big thing is we want to make sure that the authorization is in place and they're following the controls. Okay. All right. Is that about it? That is about it. Good. So let's jump to the questions. I got 10. How many questions is it? 9. I think it's like 9. Yeah, 9 questions. Okay. So I'm going to go through these real quick, then I'm going to wrap it up, and I'll get your Chapter 10 quiz up, and then you also will have to do the Unit 4 exam this week as well, okay? So you got lots of auditing to get done. Which of the following approaches is most suitable for auditing the finance and investment cycle, okay? Here's your possible choices of answers. Okay? It says ignore internal controls. We can't do that because we have to give an opinion on them, right? Perform extensive test of controls, and then limit substantive. I'd said earlier that we have to do a lot of substantive work, okay? And the test of controls don't help too much. Here again, ignoring controls, that can't be right either. So our answer here is to gain an understanding of internal controls, yes, but don't go crazy, right? Gain an understanding, but don't go crazy. And then we can do extensive substantive procedures. Remember, these are material transactions, and therefore we need to do extensive substantive procedures, all right? Number 2, loan covenants. Okay, loan covenants, okay? Remember, these are in place. Who are they protecting? Okay, they're protecting the lender, the auditor, the shareholders, or the borrower. Okay, obviously they're going to protect the lender. Okay, loan covenants are to protect the lender from borrowing the borrower's substantially weakening of the ladder's financial position. We don't want the borrower to not be able to pay, so these covenants are in place to ensure repayment of the loans. Number 3, related party is a person or entity that can, okay? This is the one I always gravitate towards, has a family tie to a management member. Okay, well, obviously they're related, right? But, okay, ultimately you got to go back and look. I have this highlighted in the chapter. Related party for a business is all about influence, okay? So, the related party is a person or entity that can exert significant influence or be influenced by the company, okay? That's your answer. Number 4, which of the following is most important audit consideration when examining the stockholders' equity section of the client's balance sheet? Okay, which is the most important audit consideration? Let's see. Auditors, the entries in the capital stock account can be traced to resolution in the minutes of the board, in the meetings of the board of directors. That does sound really important. Remember, we discussed this. Authorization is vital, okay? What else we got? Changes in the capital stock account are verified by an independent stock transfer agent. Stock dividends and stock splits during the year under audit were approved by the stockholders. Stock dividends are capitalized at par or stated value on the dividend declaration date. So I think 1 and 2 are the best choices. Changes in capital stock are verified by an independent stock transfer agent. Now, we can do that, but I think ultimately the most important consideration is going to be authorization, which means tracing it to resolutions in the minutes of the board of directors meeting. So the authorization is vital. Okay. Number 5. When independent stock transfer agents are not employed, and the corporation issues its own stock and maintains stock records, canceled stock certificates should what? Okay. It's almost like when you go look at an invoice, you want to see it stamped paid. Now, obviously, that doesn't make sense here, but we want to make sure that that certificate is, and here's that key word here, it shows up twice. Oh, well, a couple times. Defaced, right? Defaced and destroyed. So we want it to be defaced, okay? So it's either C or D. Okay, so either defaced to prevent reissuance and attach their corresponding stubs. That sounds really good. Or defaced and sent to the Secretary of State. I don't know why they would need that, okay? So it's definitely C is our right answer. 6. Again, this kind of flows into number 4. We're going to go back to number 4. All capital stock transactions should ultimately be traced to proper authorization, okay? Minutes of the meetings of the board of directors. That's authorization. Okay. An audit team would most likely verify the interest earned on bond investments by, I'm thinking right now that looking at the answers, well, if we know how much the bond investments are, the interest rates, we can calculate it. So let's see. Vouching the receipt and deposit of interest checks. Okay, that would show us that the interest in the money was received, I guess. In testing internal controls relevant to cash receipts, that wouldn't help too much. Confirming the bond interest rate with the bond issuer, that was going to help. Okay, but ultimately we can recompute the interest earned on the basis of the face amount, interest rate, period held. Nice and easy. We've got the, well, you don't use PRT, but I equals PRT. We can use something kind of like that, but it's probably going to be more of a compound interest, but you get an idea. Number 8, in auditing for unrecorded long-term bonds payable, an audit team will most likely will, okay, unrecorded long-term bonds payable are going to have interest payments, okay? So when we look at the interest expense account, all right, why is it so much different than if we're going to recompute or recalculate our interest expense, it ought to be pretty daggone close to our outstanding principal. Okay, so if our interest expense is way above what it should be, then we probably have some unrecorded long-term bonds payable. Or we've got something classified incorrectly into the interest expense account. So looking here, compare interest expense with bonds payable amount for reasonableness. That sounds just beautiful, okay? Anything else? Analytical procedures, documentation of assets purchased with bonds, confirm the existence of individual bondholders, okay? Well, we would only if we didn't know they were there, we wouldn't be able to do that. So B is easily the right answer. And now we get to number 9. Then we're going to wrap it up. Okay. Which of the following questions would auditors most likely include on an internal control questionnaire for notes payable? Okay. So let's look. This one, the first one sounds good. Okay, let's see what it says. Are direct borrowings on notes payable authorized by Board of Directors? If that is yes, then that means the minutes, when we read the minutes, we will see any additions to notes payable and also any large principal down payments. Are 2 or more authorized signatures required on checks to repay notes payable? Are assets that collateralize notes payable critically needed for the entity's continued existence? Then the last one down here, are the proceeds from notes payable used to purchase non-current assets? That doesn't matter. Okay. Again, authorization's key. A is your correct answer. Very good. Very good. What did I get? Submit it. Did I get 100? View my results. 90 out of 90. I should have turned the points off, but I didn't. That's okay. All right. So that's going to be the end of chapter 10. Okay, I'm going to upload the video here shortly. I'm going to also upload put on Connect the chapter 10 quiz, and also the Unit 4 exam will be due this weekend as well. So you got a little bit of work to do, so let's get her done. I don't plan on coming back on Thursday for more unless somebody actively asks for a session. Otherwise, you guys are on your own. Read the chapter, do the Learn Smart, and then answer the questions as needed at the end of the chapter. Okay, the chapter 10 quiz and the Unit 4 exam. So you got chapters 10 quiz, and then the Unit 4 exam is chapters 9 and 10. Okay. Until next week, y'all have a great week. God bless. Reach out to me through email if you have any problems, and we will see you guys next Tuesday for some more auditing. See you then.